We wanted to give you some information today about the basics of a mortgage. Hey guys, welcome to NVTV. We are here today with Shelly Axline. She is an expert in mortgages, all things mortgages. Let's just start with a basic, what is a mortgage?
I think the easiest way to define a mortgage would be when a bank gives a borrower money to purchase a home, and then the bank keeps that home as collateral. If the borrower defaults on the loan, then they basically sell your house to recoup their losses on the home.
Right, so pay your mortgage and you keep your house.
Exactly.
Pretty basic.
Exactly.
Right. Are there different types of mortgages?
There are many different types of mortgages. The biggest way that we classify them here are kind of in two buckets. So we have in-house mortgages and we have secondary market or sold mortgages. And then within those two buckets, there are several different kind of categories and types of loans. Within the in-house loans, those loans are kept here at North Valley. So we service them, we make all the decisions locally. And within that, they're all variable rate products, HELOCs, second mortgages, stuff like that. Within the secondary market bucket or the sold loans, those are primarily our fixed rate loans, and then those have a second layer of underwriting, and they are sold and serviced by another institution.
So if somebody does get a mortgage and it is the secondary market, what does that mean for the customer?
It means that there's another institution going through the underwriting process with us, so we may require a little bit more information or ask some more questions up front. At the back side of it, the payment is not sent to North Valley Bank, so that's kind of the biggest thing that our customers notice. They're making their payment somewhere else rather than coming in and handing us the payment here.
But other than really the payment being sent somewhere else, is there really anything else that really will affect them?
No, not really.
So if somebody hears their mortgage is sold, it's really not.
Yes, and we still work with them through the whole process. If they have questions on their loan at any time, even after it's sold, we're still here to help them.
If I come in and I apply with you, so first of all, if I want to get a mortgage loan, we've talked about mortgages before in other interviews. Do they come to the bank first before they start looking for a home, or should they call a realtor first before they start looking for a home?
My suggestion would be to come to the bank first and get pre-qualified. That way you know before talking to a realtor what you can afford, what kind of house you're looking at, what type of loan that you're in, whether you're going to be getting a conventional or government type loan with USDA or something like that.
If I'm coming to get a pre-qualification, what should I bring with me?
Definitely income information, typically 2 years tax returns, W-2s, current pay stubs. We do like to see bank statements and verify assets and funds for down payments.
Right. So what do you use that information? Once I give you that information, what do you do with it to find out how much I can afford?
We calculate how much your monthly income and your monthly debts are. And then there's percentages that we use that your payment cannot be more than a certain percentage of your income. I'm going to go about it that way.
Right, which is smart because like we said before, when we interviewed a realtor and we kind of talked about this with Jessica Winland, it's kind of a good thing to do because you don't want to get your heart on this house that's $250,000, then you find out you can only afford $100,000.
Right.
So that makes sense.
I always ask people how much they can afford. What I say that they can afford by looking at their numbers on paper may not be what they realistically can afford. So I want to know that they've thought about it and that they know what they can afford each month.
Right, because if not,
yeah,
they might get themselves stuck.
And you may have your heart set on, like you said, a $250,000 house, but what you can afford per month may not be that.
Right.
So
let's say I've brought you all of my information. I've gotten my pre-approval. I found a house, talked to you about it. What happens next? So after I've talked to you, I've got the house. What does that mean on the bank side?
So once you're pre-qualified and you find a house, then we go through the steps of ensuring that the value is there with the property. So we'll order an appraisal. Once that comes back, we ensure that the property is in good condition, that there's no other inspections needed. We also do a title search to ensure that there's no other liens on the property, because obviously if we're using that as our collateral, we want to make sure that we have the first lien position on that property. And we're always constantly just trying to make sure that we're in compliance and regulation and doing things on the back end to ensure that.
So there's people who get mortgages and they're told, this is going to take 30 days before closing. But sometimes it takes longer. What kind of things can happen that can hold up that process so that it extends that time frame?
One of the things that could happen would be we would be waiting on income verification. Maybe we're waiting on an employer to get back to us to verify certain types of income. There could have been something come back on the title work that shows maybe a mortgage from a prior owner had not been released like it should have been, and that needs to be taken care of, or that there's payoffs that we're waiting on to get from the sellers of the home. So there could be a number of things that could happen between here and there, but we're trying to move it as quickly as possible.
What is your best advice for someone who's getting their first mortgage?
I think the best thing that somebody needs to do just starting out, kind of like we talked about earlier, is to budget and know how much of a payment you want. If you're used to paying an $800 a month rent payment and that's all that you are comfortable with, and I need to know that so that I don't put you into a home with $1,000 a month payment and you can't afford it. Also to save for a down payment and closing costs. I think people hear of 100% financing and they just come in and think, I can finance all of it, which in some cases we can, but the more money you can put down up front, the more it saves you over the long run. So I think that's something to keep in mind. Don't go apply for debt for other things. Don't apply for a mortgage loan and then go buy a new car, because that'll hold up the process as well.
So we talked a little bit about the secondary and the fixed rate mortgages. Are there other products available under the mortgage category that people could apply for?
Yes. Our in-house mortgages are the variable rate options, and then within those options there are several different types of adjustable rates. We have a 5-year adjustable. So in a 5-year adjustable, your rate will be fixed for 5 years and then adjusts every 5 years after that. There are several options as far as a 10-1 and a 7-1. So in those, the rate is fixed for the first 7 or 10 years, adjusting annually after that. And I know ARMs scare people because they hear, I lost my house because my rate went so high. But they do have caps on them. And I think they're particularly good for people who maybe are a first-time home buyer and only intend to being in their house for 3 to 5 years. Then you don't have to go through the expense sometimes associated with the fixed rate product, and we can get you in a variable rate option a little bit easier and quicker that way.
Is there anything that can happen in the process of the whole getting a new mortgage that maybe is unexpected or can catch people off guard?
I think there's a lot of regulation as far as timing of documents that maybe seems to the borrower that the process is being slowed down a little bit. For example, with our new closing disclosure rules, they have to sign a closing disclosure 3 days prior to loan closing. So we may have everything and we may be ready to close, but you still have to sign that document and acknowledge it 3 business days prior to closing. So I think that's frustrating to people, mostly because it's kind of new and it is adding additional days to closing. And another thing that they may not understand or may not know why we need this information would be just updated income information. We have to verify employment 3 days prior to close. Just things like that they may not understand or know why we have to do it, but we just have to stay in compliance with all the regulations that are out there.
Well, guys, thanks for tuning in today. Shelly, thank you so much for sitting down with us.
Thank you for having me.
That was a lot of really good information. If you have any questions about getting a mortgage or you're a first-time home buyer and you want to know some more information, drop us a comment, send us a message. We'll be happy to get with Shelly and get you an answer. Thanks again for watching. We'll see you guys next week.